Jesse, welcome back. First time we've spoken in 2026, and
Oh,
since the LSE uplisting. So I think you and Andrew have spoken pretty extensively about that on other podcasts and stuff. I actually want to go back to basics with my first question, which
okay.
is, um, can you explain to people why they might want to invest in a Bitcoin treasury company like SWC over, say, spot Bitcoin?
Yes, absolutely. Uh, Good to talk again, James. We'll have plenty more of these in 2026, I imagine. Yeah, so the value proposition of a Bitcoin treasury company is quite simple uh, to me. I think this explanation applies to most potential investors. I think there are other fringe reasons why you might want to hold a Bitcoin treasury company, but I think the main reason is that a Bitcoin treasury company's value proposition is that it can increase your Bitcoin ownership over time. And that is the concept of Bitcoin yield. What it really means is that we utilize capital market tools to execute a series of transactions when um, conditions are favorable in order to increase the amount of Bitcoin per share. And so that's a range of, historically it's been mostly equity transactions, issuing new equity when our MNAV is at a premium, such that we are increasing the amount of Bitcoin that we hold more than we are increasing the amount of shares that are in issue. So while it is dilutive in terms of issuing new shares, it is more. There is a greater gain of Bitcoin than there is an increase of shares. So that nets out to a accretive transaction for shareholders. It increases the amount of Bitcoin per share. So in my mind, that's an incredibly compelling value proposition, because for Bitcoiners, the thing that every Bitcoiner wants and is incredibly elusive is, how do I get more Bitcoin? How do I grow my Bitcoin ownership? There's only 21 million Bitcoin. It's very hard to grow your Bitcoin once you've deployed it, and obviously with spot Bitcoin, you don't grow your Bitcoin ownership. You have what you have, and that's the value proposition of a Bitcoin treasury company, is that we can, a well-run Bitcoin treasury company, if it succeeds, can grow your Bitcoin ownership considerably. For example, Strategy in 2025, I think it ended up with like 22%. At a point in time, they were at 27%, somewhere 20 to 30% increase of Bitcoin per share. That's what a mature Bitcoin treasury company can do in a year. So, let's say that Smarter Web hopefully is able to deliver 20%. I think that might be conservative, but that'd be a good outcome too. 20% a year for the foreseeable future. So what is the value of a Bitcoin position that compounds, that grows at 20% a year for a succession of years? That, in my view, is worth more, considerably more than 1x now. That's considerably worth more than one unit of Bitcoin today, because of that future growth in Bitcoin per share. So that's I think that's how I view a Bitcoin treasury company. That's its role. Is it is this capital market tool, this capital market vehicle for arbitraging TradFi mechanisms to grow Bitcoin ownership for shareholders, and it can do that at a quite considerable rate that the market currently is not pricing in.
Excellent. So, does that make Bitcoin per share like the key metric then that we should be looking at? We should be following, comparing. Well, you can't compare companies with that, right? Because different share values, different Bitcoin per share.
Yeah, I think the key metric that we care about is, a strategy calls it Bitcoin yield, the amount that you are increasing Bitcoin per share in a unit of time, and that is volatile. That's subject to market conditions. Obviously, it was a lot easier to increase Bitcoin per share when our MNAV was considerably higher. In hindsight, when enthusiasm for Bitcoin treasury companies was near its peak back in Q2. But as Andrew points out, since our local price top at the end of June, SmarterWeb has increased Bitcoin per share by 50% during what has been a bear market for the company and for the Bitcoin treasury company space globally in the 8 months since.
Okay, and over the next 2 to 3 years, what, in your opinion, changes most for Bitcoin treasury companies? Like, where do you see it going in the next 2 to 3 years?
I wonder what'll happen, but I think it's going to be some degree of sort of narrative consolidation around leaders and well-run Bitcoin treasury companies. And my view is that sentiment for Bitcoin, so I think it's not a controversial statement to say that sentiment for Bitcoin oscillates. That there are periods where people are extremely excited about Bitcoin and its future and get greedy. People want more Bitcoin. And then there are periods like recently where the narrative flips and people are just, the broader market is just not very excited about Bitcoin at all. And that just keeps happening. There's just a sine wave of sentiment for Bitcoin. I think that Bitcoin treasury companies are by and large downstream of that. I think when you are excited about Bitcoin, you're highly confident it's going to several $100,000 per coin. You want as much of it as you can get. At that point in time, the value proposition of MicroStrategy becomes very salient and exciting to you, because here's a way where you can not only have your Bitcoin exposure because of the Bitcoin on their balance sheet, but the promise of growing that Bitcoin ownership through Bitcoin yield into the future is very compelling. So that's when sentiment for Bitcoin treasury companies, I think, swings in the positive direction pretty hard. And frankly, is in a more amplified way than Bitcoin's market sentiment swings. So I think that in times when Bitcoin has been trending up, Bitcoin treasury companies will become hot again. This has already happened, and people quickly forget that, because strategy in the depths of the bear market in 2022 traded at a 0.7 MNAV. And then in 2024 it was at a 4x MNAV, and that's strategy. The mature juggernaut that already had 1% of all the Bitcoin in the world at that time. So that's the kind of volatility that's possible for MNAVs for an already quite large and established Bitcoin treasury company. I would expect that volatility of MNAV is more likely than not more pronounced for a smaller Bitcoin treasury company, because if you get excited about Bitcoin and then you're excited about the model of growing Bitcoin ownership, and then you are dealing with a company that has a smaller market cap, has more potential upside because it doesn't hold that much Bitcoin right now, and if it was able to achieve meta planet scale of treasury holdings, or get to 1% of all Bitcoin, that would constitute an order of magnitude more upside than for a smaller Bitcoin treasury company than for Strategy. So I think that you can see how the market, when it's in that state of excitement about Bitcoin, can very easily get super excited about Bitcoin treasury companies again. Now, I would caution that there will probably be a permanent hangover of wariness about MNAVs getting high, and for that reason primarily, I doubt if MNAVs will get to 20x again, as they briefly did. But I wouldn't be surprised if MNAVs for smaller Bitcoin treasury companies get to 8x the way they did for Metaplanet about a year ago. This time a year ago. So again, we'll see. But I think that I'm undeterred about the future for Bitcoin treasury companies, and certainly for Smarter Web. I think it's a matter of time. That's my personal view, and it's a matter of time for Bitcoin to trend positively, run hot for some amount of time, and during that period of time, I think we'll see an inevitable uptick of fresh interest in what a Bitcoin treasury company does, in large part because I think Strategy will be quite successful during that time. It's amplified Bitcoin is their whole model right now. So they're trying to find like a 50% amplification of their Bitcoin balance sheet. And so if Bitcoin rips, if Bitcoin is up 200%, then Strategy without any MNAV expansion would be up 300%. And then of course, if there's sort of MNAV expansion because people get excited about that outperformance, then that's even more upside for Strategy. So like just kind of taking it back to that taking stock of the logic and the thesis, keeps me extremely excited about Bitcoin treasury companies in general, and then especially excited about Smarter Web because of its role in the global Bitcoin treasury space and its leadership position in the UK, which a recent analysis, which will be coming out soon, has me freshly excited about. Like, London is the second most important financial center in the world, and there's going to be a leading Bitcoin treasury company in every significant capital market, and if Smarter Web is in that position to be the leader in the UK, that's a huge opportunity, especially with the future of hopefully getting to preferred equity instruments and eating market share away from other fixed income products in a fixed income heavy capital market.
Thanks.
That's a bit of a long answer. That's everything that I have to say right there.
Well, do you want to end there?
That's all you all need to hear.
I mean, that was kind of the point of the question, was to try and get people to revisit the thesis, right?
Yes.
Why did we do it in the first place? Okay, so was it June or July that you kind of started with Smarter Web? I know.
Yeah, well, I guess June is when it started to be public. I had been kind of helping for about 4 weeks before that.
Sure. So since that sort of initial appointment and then your official appointment as head of Bitcoin strategy, has the sort of treasury strategy evolved over that time, and is it now evolving due to being LSE uplisted?
Yeah, it's a good question. It hasn't really evolved. It's quite a simple model. Uh, I always point to Metaplanet because Metaplanet is the model of what you can do as the first and leading Bitcoin treasury company in a capital market that's not the U.S. In the U.S., you have to compete with strategy. You have to differentiate in some way. But if you're Metaplanet, you get out of the gate first. You run hard. You develop that retail community of high conviction Bitcoiners who see the model, have trust in management, are excited about it, and you keep building from there. And they've done that. And part of that, I think they kind of stumbled into. They just thought it was a great capital market. There was a strategy worth trying, and then that's ended up being the reason for their success is how they went about it. And so we're approaching it. We have been approaching it the same way from the beginning. That's part of why I wanted to work with Andrews. I saw the pattern recognition of he's going about it the way that Metaplanet went about it. And I think that that's the winning model. If anything, that obviously it's unfortunate that the tide went out very quickly and quite fully for Bitcoin treasury companies as a model. It's frustrating because I think that's personally, I think that 95% plus of Bitcoin treasury companies or purported Bitcoin treasury companies are not, well run or are not executing the strategy in the way that I think makes sense to do so. I've never been a fan of the pipe model because the pipe model inherently relies on the secondary market absorbing, being exit liquidity for institutional investors who get a discount up front. But how are you going to develop that secondary market of retail investors who are happy to buy that stock off of the institutional insiders? That never made sense to me, and I think it's been proven to be quite a flawed model in that regard. And no surprise that liquidity has dried up for a lot of those vehicles because retail is smart. Retail doesn't want to be treated like exit liquidity, and retail deserves to be respected. And you can't win without having the respect and trust of retail such that they want to buy the stock when they think it's undervalued. Like full stop, right? You need that. Yeah. Anyway, so I think that when you talk to sort of everyone who's not a diehard Bitcoiner about Bitcoin treasury companies right now, or DATs as they like to lump in crypto with it, there's quite a barrier to serious engagement because they think that that's not a hot thesis right now. That's everybody got burned by Bitcoin treasury companies or DATs, and yeah, they did get burned by the pipe deals and poorly run Bitcoin treasury companies. And our stock sold off heavily. Because we got lumped in with all of those other companies. But I think that over the next couple of years, the sort of fundamentals will have time to continue to bear out. I mean, I've definitely noticed, especially in our conversations with institutional investors in London, how on the other side of the table, it's quite clear that they are trying to understand, okay, so Smarter Web is still healthy. First of all, why? Why are you healthy? And these other ones that we talked to, 6 months ago who came into the same office and talked, sat at the same table and told us why they were going to win. Why did they not have liquidity anymore? It's like, so there's a bit of educational effort there, and of course you have to be quite polite about it and not say that it was doomed from the start, because you guys were seeking, well, the whole model was to get institutional investors discount and rely on exit liquidity from retail. You can't really say that to institutional investors, but so yeah, I lost my train of thought a little bit there, but yeah, obviously got wound up on that. Oh yeah, so like in meetings in London, it's quite clear that they increasingly see Smarter Web as the name synonymous with Bitcoin Treasury Company in the UK. And some of them understand what that means. Some of them understand, like, okay, they're trying to be MicroStrategy for the UK. Some of them don't know about MicroStrategy, and they're just like, okay, this is like some equitized Bitcoin thing. But increasingly that, there's liquidity there and not liquidity elsewhere. And, so little by little, Smarter Web has continued to separate from the pack in the UK during this downtrend. And, we talk about it internally. It's about stacking little wins in a time when it's tough to you're not going to get the big splashy wins of, you're not going to go out and raise $1 billion right now, but you can make little wins that help continue to underline that you're doing well, you're healthy, and you're continuing to build on that lead, and others are not. So I think that's what's going on right now, and that frankly puts Smarter Web in a really good position for whenever Bitcoin does start to trend up, and we can talk about that too. I have thoughts on that. Whenever Bitcoin does trend up and people get excited about Bitcoin, and that sort of 2022 to 2024 shift of sentiment about Bitcoin treasury companies may hopefully happen again. And then at that point in time, Smarter Web will be hopefully a fair bit stronger than we are today, and everybody else, by and large, all the 95% of Bitcoin treasury companies that don't have a great model will be that much worse. And yeah, I think the institutional investors are sort of wrapping their head around, okay, this may be the winner here in the UK, and strategy is very attractive and has succeeded immensely. Metaplanet has succeeded immensely. We like the UK market. We think this model could work in the UK market. So what are your conclusions from that? And it's also just like a matter of relationship building and getting that message out in front of curious institutional investors who they have to get comfortable, and the only way you get comfortable if you're not a Bitcoiner and you don't understand it yourself is by talking with somebody every 6 months for a period of time, and then seeing that they are executing over the course of that period. So yeah, that's what's going on.
And I think it was yesterday, or it might have been today, BTC Inc. and UTXO completed. Well, sorry, Nakamoto completed the purchase of those two, and 210K Capital, who are invested in SWC, are a subsidiary of UTXO. So what does that mean now for SWC?
Yeah, I suppose nothing is changed there. So 210K is the fund that it that UTXO is the GP for, right? So it's the management entity that is the investment advisor that manages the 210K fund, but the 210K fund is owned by its investors, right? And so the 210K fund's position in Smarter Web is owned by its investors, and the management entity is now under a different parent company, but that in theory doesn't change anything about the ownership and who owns that position in Smarter Web. It is still owned by the 210K Capital's investors. But yeah, it's it was a cool announcement. I think it's an interesting development because as they point out rightly, it gives them the second largest operating business out of any Bitcoin treasury company, because there's a significant business there around all the Bitcoin events that they host. And yeah, we'll see how that plays out for them. I know there's been some sort of blowback about that, and I don't fully understand the structure myself. Haven't spent that much time digging into it, but yeah, it's an interesting development. I think it was kind of the plan from the beginning. I think they've talked about that at various points. So, and it always made sense, to have an operating business attached to the Bitcoin treasury play, and hopefully it works.
And someone's just asked in the chat, let's see if I can put it on the screen. When do we expect the start of institutional investors to start investing?
Yeah, I mean, in some ways, there already have been institutional investors, especially back in the raises that we did in late summer. Smaller checks, the sort of £1 million range, and a handful of them. And then, we did a significant one in end of October, early November, I believe, with a few institutional investors. And, I think that if we continue to execute, there will be more, right? That's part of what has been interesting about, we did a non-deal roadshow is what it's called, where you go around and you talk to a bunch of investors. You're not selling anything, but you're, sort of helping educate them about the company and the general pitch. We did that in London when on the week that we had the uplisting, and there's curiosity is, I think, how I would describe it. And there are also investors who were interested, but couldn't invest when we were on Aquis, and we had a few meetings with those investors, and they're still curious. So I think that's, I guess, a matter of time, but certainly can't say anything definitively. But I think it's a matter of us continuing to execute and then putting together some book builds when there's sufficient appetite from investors globally to get the critical mass necessary for that to make sense. And that's, we weren't able to do that for some time here while the uplisting process was going on, and now we are able to do that again, though conditions are much tougher. So I wouldn't expect nobody should expect it to be every couple weeks the way it was in the summer, but it's now possible.
Very diplomatic. So you mentioned you've got some thoughts on Bitcoin going up. The question I was going to ask you is what would you tell an investor who's worried about the volatility and timing the risk and stuff? So kind of tie in Bitcoin thoughts in that?
What would I tell people about the volatility and risk?
Yeah.
Yeah. Well, the old refrain is still true. Volatility is vitality. It is just misunderstood. I think Bitcoin has good vol. By that I mean that if you look at the histogram of daily returns for Bitcoin over its lifetime, it's a bell curve. Some days negative, some days positive. But there's a fat right tail, as they say. There's a cluster, really, of kind of like 5 to 10% positive days, and there's not as much of that on the negative side. So what that means is a volatile day tends to be a positive day. Like in TradFi, a volatile day tends to be a negative day. So when you talk to traditional investors, volatility is a scary word for most portfolio managers, especially ones that are sort of inherently defensive. Like a wealth manager does not like the word volatility. They want safe and low volatility because they're trying to preserve wealth. But if you're trying to grow wealth, you want to be in a high volatility stock that skews to good vol, and that's what Bitcoin has historically delivered. Of course, its volatility is down quite a bit in the recent era, and that's just Bitcoin maturing as an asset. And that's where Bitcoin treasury companies are quite interesting because they amplify Bitcoin's volatility. It's call it what you want, like the higher beta version of Bitcoin. Bitcoin treasury companies seem to react strongly to Bitcoin trending one way or the other. And that goes into the sort of sentiment about Bitcoin treasury companies and how that evolves based on how people feel about Bitcoin at a given time. But anyway, Bitcoin's vol has been like 35 recently. It's a fair bit higher. And Smarter Web's vol has been like 100 to 120. And that's, to me, kind of reminiscent of like what Bitcoin's vol would have been like in probably 2013, maybe 2015, like that kind of vol. And it's broad strokes here, but I think that's what it takes to have the kind of performance that Bitcoin had back then. Is you need that commensurate amount of vol. So it's a great thing ultimately that a Bitcoin treasury company offers that. Of course, it has been very painful in the last 8 months, where that high vol has been a bear market experience, where high vol in a bear market is not fun. But high vol in a bull market is very fun. And we're probably at a point where most Bitcoin treasury company investors have forgotten what that feels like. And that might be a good thing in terms of, sort of being indicative of where we are in a sentiment cycle.
And you sort of intonated earlier about you've got some thoughts about Bitcoin going up.
Yeah, well, I guess that's a good segue right there. I don't know. I'll preface by saying that I'm always too bullish about Bitcoin, and it's something of a deliberate choice I made years ago. That somebody made the point that you're better off being too bullish about Bitcoin than not, than being bearish about Bitcoin. So, and I think that's right. It certainly has proven right. So, being too bullish also helps you to hold during downtrends and bear markets, and that has been important for me over the last decade. Not quite decade, but yeah. So where do we find ourselves right now? It's very interesting that, I guess the majority, I don't know, first of all, like I nothing here with certainty or clarity, but in probabilities, right? In probabilities, I think it's more likely than not that we have actually been in a bear market for the last actually 14 months for Bitcoin. And I think it hasn't felt like that in large part because gold and silver did so well in 2025 that it actually kind of pulled up Bitcoin along with gold and silver. Even though gold and silver massively outperformed and Bitcoin, looked like a real laggard, I think we've been in a bear market and it didn't really look or feel like it because of those forces kind of contributing. So 14 months ago, I was at Michael Saylor's New Year's party, and that, in hindsight, was peak sentiment about Bitcoin, about the future. 2025 was going to be a huge year. Strategy had been running hot. Metaplanet had been running hot. Everyone was super confident that was going to continue. And in hindsight, that was the climate we were in at that point. If you look at the RSI, and I don't put much stock in indicators or whatever with regard to markets, and especially Bitcoin, but it is interesting to look at the sort of RSI chart of Bitcoin versus gold. And if you look at the weekly chart in the RSI indicator, every 4 years it dips into oversold, and right now is the lowest it's ever been. And the llast 14 months has been a downtrend from overbought. The last time it was overbought was December 2020, gosh, whatever that was, 2023.
24.
Yeah, 2024. Yeah. That was when it was last, on the top of the bands, and it's been kind of bouncing and trending down for 14 months. And if you go and look back at the 14 months that preceded each of these bottoming points where RSI reaches oversold on that chart, 14 months of bear market, of sentiment downtrend more specifically. And that's not quite perfectly aligned with bear market, but you have peak enthusiasm and then that fades, and it may not occur to you that you're in a bear market for most of the time, but it turns out in hindsight you were. I think that's possibly what has been happening with Bitcoin. And if you think about it, that would be kind of in line. I need to put a post together about this, but so you're getting kind of all the half formed thoughts here. But the 2017 bull market, so the Bitcoin halving was, I think, June 2016, and then you had 18 months before the peak.
Mm-hmm.
And then the next cycle, so the next halving was May 2020. And you had actually 11 months until the enthusiasm peak, which you can see in various metrics like Google searches for Bitcoin and RSI too. Like that was the enthusiasm peak right before the China mining ban in May 2021. So that was 10 months post halving. So you had accelerated the time frame where the market had, I think, gotten excited about the halving and digested that changed environment more quickly than it had previously. And in part because the change, is half as big of a change from the prior halving. And then if you look at the 2024 halving, that was in April, and it sort of seems like we had sentiment peak December 2024, so like 8 months later. So again, a quickening of how long it took for the market to digest the impact of the halving and get excited about it and price it in, because there was a strong track record of bull markets following halvings. So you say, oh, okay, a halving just happened. Well, I'm going to get bullish now, rather than let it play out slowly as it did in 2016. So anyway, that is increasingly how I am thinking about it. That sentiment peak for the 2024 halving happened really quickly, and of course this like overarching problem too of AI investment and AI sucking the attention out of the room. I think probably contributed considerably. Meanwhile, you've got a bunch of OGs holding Bitcoin who were always going to sell at 100,000 because they've been holding for 15 years, and they're 50 years old now, or whatever, 45, and they're super rich and they want to cash out half their stack. And so I think there's a lot of that happening too. So all those things I think added up to, we had a much more muted bull market than expected, and I think a shorter one than people anticipated. But anyway, fast forward to now, I think that we may have been in the sentiment downtrend for 14 months already, and historically that's the extent of it when you look at this chart versus gold. So 12 months from now, I think it's more likely than not that Bitcoin outperforms gold. I think it's more likely than not that sentiment is better than it is now, and I also think that it's quite possible that here or near here, maybe it's another quarter away, who knows, is a bear market bottom for Bitcoin, which is historically followed by 3 years of uptrend. In which case, that's a fantastic setup for Smarter Web. If we manage to live through a bear market and we're still making progress and relative strength in the UK has continued to grow, then we're set up in a great position to continue following the sort of metaplanet trajectory that we're still in the early stages of, but it's all still right in front of us. I do point back to the IPO for Smarter Web was in late April last year, and the sentiment peak globally for Bitcoin treasury companies was late June. So you had 2 months. So Smarter Web has enjoyed 2 months of favorable conditions and managed to get probably at that point 2,400 Bitcoin or whatever it was, maybe 2,000. And obviously Metaplanet had at that point enjoyed 15 months of good conditions and had managed to get to 30,000 Bitcoin because of 15 months of good conditions for Bitcoin treasury companies. So put all those pieces together, right? And at some point here, Bitcoin trends up, and slowly, with some lag, I think enthusiasm for the Bitcoin treasury company model creeps back in because people get excited about Bitcoin. They want more Bitcoin. And Smarter Web is in position to continue doing what it has been doing, but it's a lot slower going now. And you could, follow the Metaplanet trajectory in the next 12 months of quite good conditions for Bitcoin treasury companies whenever those arrive.
Yeah, I think this cycle's been pretty wild in the fact that there's never been so much positive things going on for Bitcoin. Trump getting in and the positivity that's brought, potential SBR, other nation states getting involved, and on top of that, we haven't had, maybe yet, touch wood, any of the big blow ups of FTX or Luna or any of that kind of stuff. And yet we didn't get the euphoric kind of blow off top for Bitcoin anyway. What are your thoughts about quantitative tightening being sort of a part of that? It's the first cycle that was kind of fully within a quantitative tightening window.
Yeah, it's a great question. I guess I've always been such a big proponent of the halvings and Bitcoin supply schedule being, I cheekily refer to it as the prime mover for Bitcoin, to borrow that sort of religious term. But I think that Bitcoin's endogenous supply schedule properties, its halving of new supply issuance, force the world to process that variable as it changes over time. And the only, assuming that demand doesn't go down by half, that forces the price to go up over time. And so I've always been an acolyte of the halving's importance. And yet this cycle disappointed on that front considerably. And that happened in the first time that Bitcoin's really faced quantitative tightening conditions, and also not favorable conditions for the business cycle, which is quite related. But so those theories that it doesn't really matter so much what the halving does, but instead it's all about global liquidity, and that's really about being in a quantitative easing environment, which is good for the business cycle, and all that. Like, those theories have been out there for a long time and didn't really hold much weight, but now they seem a lot more plausible. But then again, I always come back to that, the first principle of the only reason people, the first reason that people care about Bitcoin is that it has increasing scarcity of new supply issuance. So it's harder to get a unit of Bitcoin in the future than it is now. So that matters. And that's the first thing that matters. And then the game theory from that, plays out too. So, I don't know. I think it's a good setup for, I've seen a chart of, the business cycle appears to be, has been in a tough period for a couple of years, and sort of looks to be at its historically, where it bottoms, and at the same time, there's all this pressure for switching to QE, but there hasn't been any calamity that has sort of kickstarted it, as there usually is. So we'll see. But if it turns out that matters a lot, and we've been in a tough climate, and again, and then that happens to line up with a switch to good times, that could bode very well for Bitcoin. And then obviously Smarter Web is, in my view, because of the things we've talked through, downstream of sentiment about Bitcoin, and importantly amplifies sentiment about Bitcoin.
Yeah, I think with the quantitative tightening, quantitative easing, business cycle, all that kind of stuff, is that if that is what causes it, then it's looking pretty good for next cycle.
Yeah, Right.
It's kind of,
And the point that I'd make in there too is that I feel like Twitter generally feels like we just started a bear market. Could be because people were so bullish in Q4, and we had an all-time high in Q4. That was October that we had an all-time high of $126,000 per coin. So and if you apply the sort of historical pattern of like, okay, now we're going to have a year-long bear market, and maybe we're 2 months into it, that's pretty bleak. But I don't think that the sort of sentiment metrics line up with that. It seems like we've been in a rough market, and people are being thrown off by the fact that gold pulled us up to a new all-time high in October when sentiment wasn't there. And momentum for Bitcoin was like mid bear market kind of pattern. So anyway, I think I'm considerably more optimistic than the average Bitcoiner on Twitter right now, because I have this view that I think we're at or near a bottom for Bitcoin rather than starting a year-long bear market.
Okay, and I want to ask just a couple of quick fire questions, and then we'll talk about, I don't know, events and upcoming.
Yeah.
Stuff. So, quick fire. What's the biggest lie businesses still believe about Bitcoin? So, like when you're talking to investors or something like that.
That's fun. Yeah. I mean, all the classic, misunderstanding of Bitcoin is still out there. So, that is a full range of things I could say. But I think the overarching thing that's still surprising to me is that the default position continues to be that Bitcoin is just some collective Beanie Babies kind of value. Like Pokemon cards or something, that like people have just decided that this thing has value for no reason. And I think that's, obviously that causes a considerable hesitation to invest in a Bitcoin treasury company. If you are an institutional investor and you have that sort of default mentality about Bitcoin, well, you can talk about how great we're doing all day, but if they don't, if they believe that your treasury is built on Pokemon cards, that's a problem. And they're not going to get over that. So there's, a big educational lift necessary with most people out there, most prospective investors. And again, luckily that's where Bitcoin is quite compelling, because of its endogenous properties, its increasing scarcity over time. Bitcoin will continue to be that prime mover. In my view, my mental model of Bitcoin is that it forces prices to go up over time, and people have to process that reality as it happens to them. It doesn't that in my mental model of Bitcoin, it doesn't Bitcoin doesn't need people to believe it. It will keep doing what it's going to do because of its properties of increasing scarcity, and then people have to adjust to that. So it totally switches. I think most people out there think that Bitcoin needs them. Like a Ponzi scheme would. Like you would need people to keep coming in order for it to keep being fueled. But Bitcoin doesn't need new adopters. It just needs time to keep playing out. And I think that's part of the process of coming to Bitcoin is understanding those mechanics and realizing that it's going to keep going up so long as Bitcoiners who believe in it don't radically exit. And then when you make that switch of Bitcoin doesn't need me, it's going to keep going up without any new adopters necessarily, like, all else equal, sort of static. Then I want it because I want to be a part of something that goes up without relying on any inputs. And it totally flips it. So anyway, I guess that's the biggest misconception that's still out there, and will be for quite some time. But luckily, the great thing about Bitcoin is that it imposes its reality on people. It doesn't ask, it doesn't plead for people to adopt it. It will impose its supply schedule on the world, and the world has to adjust.
And then another quick fire one. Why will Bitcoin native companies win over time?
Yeah, I really got to find the time frame for this, but I think it was Jamie in the community who pointed out that it was over, maybe it was this century, maybe it was over the last 10 years, that FTSE companies have averaged 6% a year returns. And then if you believe the Michael Saylor model of Bitcoin's going to go up at 29% a year for the next 2 decades, and you just stop there, right? Like, what's the performance of Smarter Web, assuming we don't add any more Bitcoin? And Bitcoin does what Michael Saylor believes it will do. Well, then that's 29% a year of price appreciation for Smarter Web. Meanwhile, if the sort of FTSE average continues into the future, 6% for other companies on the London Stock Exchange, that right there is a winning story, right? Like, and I think that's what is so obvious to a Bitcoin treasury company investor, but everyone else hasn't thought about, is that if you have a treasury, if you have a balance sheet built of Bitcoin, then it will perform with Bitcoin plus whatever you can do in terms of adding Bitcoin per share. So that's the real value proposition of a Bitcoin treasury company. Is if you're bullish on Bitcoin, it will track Bitcoin, plus you're layering on this risk that causes it to be uncorrelated with Bitcoin, and hopefully outperform Bitcoin because you're adding Bitcoin per share.
Fantastic.
Yeah.
So tell us a little bit. I know you've spoken about events and stuff, but tell us what events are coming up. Is it Strategy World next week?
Yes, it is Strategy World next week. Saylor has invited Andrew to speak on, and Andrew roped me into that, which I'm looking forward to. So we will be, I think we've got like a 15-minute time slot. We will be speaking about Smarter Web and the UK as a market for a Bitcoin treasury company. So quite excited about that. Saylor has also very kindly invited us to a dinner where who knows who else is there. I think a curated set of individuals. So looking forward to that. I think that alone speaks to Saylor's opinion of Smarter Web, and especially of Andrew. And I think that's quite a significant, I mean, literally the most important stamp of approval you could hope for in the world, I think. So, if Saylor's right about things, as I think he generally is, then that's a good sign. So yeah, that's next week. And then the next event will be the AGM in Bristol in mid-March. And then in May, we have the Bitcoin Unconference UK coming up at May 29th. You can get tickets on the website. Very much looking forward to that. Looks like we will have the CEOs from a handful of the biggest Bitcoin treasury companies in the world, including Strategy, speaking. And so that was a great event. The first edition was a great event in New York City in October. And very much looking forward to having the second installment be in the UK, the second most important financial center in the world.
I think that's your favorite stat at the moment.
Yeah. Well, you'll see why. I mean, I put together the analysis of the global asset landscape chart, but for the UK, and sneak peek, it's 6%. 6% of global assets is commanded by the UK, and that doesn't necessarily mean owned by UK individuals or entities, but domiciled in the UK, basically, or held by UK individuals or entities. So that's significant. In the course of doing that research, I've found out that in terms of like financial plumbing, so it's sort of amorphous umbrella description of capital intermediation, which is kind of equivalent to financial plumbing. The UK has like 25% market share of like all the financial plumbing in the world, including 40% of all foreign exchange volume, so currency trading, and 90% of global interest rate swaps occur through London Clearinghouse. So all these like exotic financial activities, and being the preferred banking destination for half the world, really, the developing world in particular. That's where the gold is stored. That's where the bank deposits are held, and that is very good for that's very good for a potential future where you're trying to understand how much capital is within a regulatory regime that might be interested in a preferred equity instrument.
Awesome. Yeah, I'm really looking forward to the unconference. The lineup looks amazing. I kind of wish it was May already, to be honest.
Well, the weather will do that to you too, huh?
Yeah. Well, maybe you're going to get to enjoy that soon too.
Yes.
Thank you very much, Jesse. We've kind of gone over the hour, but really appreciate you taking the time to talk to me today, and I hope it's been useful to the investors and people watching at home.
Yes. Look forward to next time. Thanks, James.
Yeah.